Morning, everyone. I'm Akash. I've been working in OCBC Bank since last 10 years. Regarding my experience, I'm leading the development teams for full stack development for OCBC Bank since past 6 years. I'm currently the engineering lead for microservices development. We develop, deploy cloud-native solutions for the bank from last four to 5 years. I've been involved from the inception till the deployment for all the digital transformation that is happening in the bank currently. So I'm honored and glad to speak about open banking here. So let me start. Okay, what is open banking? I think Singapore is a pioneer where, some of the Western concept, open banking started from US, Europe, eventually coming to Southeast Asia. And within the Southeast Asia context, Singapore was one of the first nation to implement open banking. Now, it's a methodology or a collaboration where, third-party fintechs or third-party service providers, we call them TPP, how they can collaborate, they can leverage the bank ecosystem, perform transactions, view data of a customer. Within the banks, within the Singapore region, how they can collaborate, exchange data for the customers securely, and provide a better value to the customer. So open banking deals with all of these. Now, how is it made possible? The key to this is open APIs. APIs are the founding blocks for any banking or any industry where you want to expose your asset to any third party outside. Now APIs come in different flavors. In old times we had middleware or service-oriented architectures where the banks were developing services, but these services were only used within the banking framework, within the banking channels, or within the organizations. With the development of APIs, we are no longer restricted to expose a service or an asset only to the bank. It is open. It can be open to public. It can be open to third parties. Now, why the API has led the revolution exposing a bank asset to outside world? Of course, if you look at the Singapore market, right, every bank has services exposed in form of open APIs, which we call where the APIs are exposed to public. But open banking deals primarily where we expose our APIs to third parties, which is more towards partner APIs. So a strong collaboration is needed between all the partners. These partners could be other banks. These partners could be third-party providers. And that's where we provide the overall benefit to the customer. The customer here, in the left, I show the traditional model, where a customer chooses, okay, he wants to transact with a specific bank or, different banks. But in the open banking model, the customer lies in center of third-party providers or fintechs or within the banks. There is a close collaboration, that exchange of data happening within the fintech world, within the bank, and within the customers. So what benefit it provides the customer is some tailored journeys, what the bank could not provide, aggregated view for the customers from different banks. All these are the possibilities that the customer can leverage. Okay. I think so. Excuse me. Just hold on. Yeah. Okay. Okay, thank you. I'll continue. Okay, the next topic which I'm going to talk about is bundling, rebundling, and because that is very critical to the formation or how the open banking evolved. So if you look at, right, what was there in past, or I think even in present in some of the banks or some of the sectors, right, bank used to have bundled products. These products were given to its own customers. Everything was like sort of monolithic. These were not exposed to any other third parties, or they were silos, and bank owned the full value chain of products. That is the development all the way till exposing a product and launching a product to the customers. But the next phase, which we are in today's world, where we have open banking, I call it the evolution phase. Now, what has evolved here? If you look at it, the bundled products, right, are no longer bundled. Banks do not own the entire value chain of the products. We have created APIs, banks have created individual services, which via the AISPs and PISPs, the third parties can leverage. Now, what are these AISPs and PISPs? These are nothing but your third-party providers who can form, account aggregators, which are AISP, and payment initiators, which are PISPs. So these are the core bases wherein a third party comes in between the bank framework, give an offering to the customer, leverage the assets of the bank, and provide a tailored experience to the customer. And these are nothing but the open banking APIs. The next phase, which is the revolution phase, which is what we are going to see in future, is open banking will eventually lead to open finance, where the banking options are no longer given to a fintech or a banking company, but it will extend to other commercials. What do we mean by that, right? Entire journey of a customer, whether he belongs to any industry, the banking experience will get embedded into it. The other experience from other industry will get embedded into the banking journey, and that's where we'll see open finance and open collaboration happening. If you look at it, right, this is the very traditional model where we have a banking product. The bank is offering those products via any channel, whether it's web, branch, or today it's mostly mobile, to the customer. The value chain is from the left to right. Whatever the products that are developed by the banks or the bank own, it is going to the customer, it is providing a value to the customer. In turn, the customer is giving a fee or a transaction or spending $1, which gives benefit to the bank. What is getting disrupted here? So if we take channel as a base, which is an offering or a face to the customer, we have a fintech coming here. So this fintech comes here, it collaborates with the bank, it provides a tailored offering to the customers. What does the bank do here? The bank provides banking as a service, which we call it BaaS. So the same banking product in a tailor-made fashion is now offered by a fintech, and the customer now has options to choose any one of these or both of these. So he got a different offering. This is what we call it. Bank has created an ecosystem here. Now, there's a slight difference between ecosystem and a platform, which is always debatable. But this I would call ecosystem because bank has leveraged a fintech or a third party, created a value to the customer, provided its service, and provided an ecosystem for a fintech here to come and leverage the assets of the bank and provide value to the customer. Okay, the next phase is if we disintermediate the bank itself can collaborate with a fintech and leverage some of the products or offerings from the fintech world and give it to our customers. This is where we call it banking as a platform. Platform here means a bank is not just leveraging its own products, but it is leveraging the platform which is provided by fintech providers and again offering to the customers. And this is where we call banking as a platform. If you look at it, again, there is a new player here. Earlier, there were just 4 players. Now we have 5 or 6 players coming into the play, and value is getting created. The value chain is getting disintegrated. The customer, on the other hand, is getting better offerings, tailored propositions, and that's why he's giving $1 value, both to the fintech as well as to the banking world. The next phase could be, what I showed earlier. You have fintech at the left-hand side also, and it continues. The journey continues. Okay. I'm going to talk about something about disruption within the banks and what are the threats and opportunities for each of the player here. So for a bank, as and when the open banking opens, we see each bank is offering the data to other banks. The data is visible, Of course, it is secured in a very advanced way, but the data for each customer is available to the other bank. Having said that, this has led to competition within the banks, as to who will offer a better product to the customer, who will offer a tailored proposition to the customer, and how the banks can get to know the customer better. For example, I may have an account with particular bank X, but my bank X also knows what is my product and my value proposition in the bank Y, which I own, and how do I have my proposition there. So the data sharing becomes a key within the banks, within the third-party providers, which is helping the customer to better manage its finances, as well as create value to the bank. Next comes the fintech. Of course, for fintech world, it's not so easy. There's a huge competition out there, and how the fintech evolves its technology and gives the best proposition to the customer, that's sort of threat here. The advantage for a fintech is they can always collaborate with a bank and offer a tailored proposition to the customer, give a unique experience to the customer, a unique selling proposition to the customer. Coming to acquirers here. The acquirers here in the world of open banking, I think they have to take a new role of PISP, which is they become a new payment initiators. They have the option to provide a new payment service by collaborating within the bank. For a merchant, the threats are, of course, as the technology is evolving, he needs to spend more on the technology, but the advantage for him is he has direct account-to-account payments he can do, instead of going via credit cards and all those things, which has a lot of fees and all. He can leverage on A-to-A payments, so that's the biggest advantage for him. The other aspect for merchant could be, he can differentiate his payment offering from a traditional payment offering to other alternates. Okay, open banking strategy, this is somewhere I saw from Software AG side, which I found it very interesting and to share to all of you guys. On the x-axis, we have the ownership. Okay, we have internal. Internal means it's bank. External here is a fintech world, and hybrid is it could be bank and fintech both. And what is the offering at the banking products? So if you look at here, traditional bank, the consumer is an external entity, the channel, the APIs, which is the product offering, whether it could be a consumer provider, as well as the product, everything is owned by the bank. That is where the traditional banking model comes. You move towards the right, we have the product is owned by the bank, but the API or the provider is a fintech or a collaborator, which is a hybrid model. And that's where bank is distributing its product as a service to another third party. You move one ladder up to where we have a plug-and-play model, where the products as well as the APIs are hybrid. That is, both bank and fintechs own them, and the customers can leverage. Banking as a platform, if you go, the products, the API, the channel, it's all shared within the bank, within the third-party provider, and consumer has a better choice now. He can leverage multi-products. He can go to the bank, he can go to the fintech and leverage that world. The top layer is for non-banks, where you have a pure marketplace in the open banking world, where bank or fintech can act as a broker there. Okay. Next is life cycle of open banking. So for any bank or any financial institution, before we evolve, to even implement the open banking paradigm, or before we involve to engage with third party to offer a specific solution, I think these are the 7 key points that we must take into mind. One is the risk management, right? So as I mentioned earlier, the APIs are private, public, and partner APIs. The security paradigm for each of these APIs differ, and for an open banking world, we are leveraging partner APIs. So how they have to be secured, how the risk have to be managed, all these things have to be thought through. Within the country and within the specific industry context, there is a regulatory compliance into the picture that whom we can onboard, what we can onboard, and what offerings we can give. So we have to abide by this. Next comes the protection mechanism where, because the data of the customer is getting shared, we need to ensure we have the secured mechanism, the secured way in which we share the data. And even before, we onboard a customer, the consent of the customer is very important. So even in our Singapore context, we have customer consent taken first before even we start sharing the data or utilizing his data to a third party. Within the customer consent, there's something called as right to be forgotten. I think this is there in US markets where, if a customer opts for that right to be forgotten button, you have to delete his data. So those kind of capabilities have to be there. Customer centricity is also the key aspect here because we explore the data, we have the data, but what is the personalized, tailored offering that can be given to the customer is very important. Next comes, what are the bank capabilities before even we embark a journey, on the open banking? Do we have a robust system? Is our system, having capability to be exposed, to be transformed into APIs? All those things are key ingredients, that you have to leverage. And what is the operating model? The next one is TPP capabilities, which is third-party provider. We need to make sure their onboarding process is there. What are their risk and regulatory frameworks that they have, because bank is going to get associated with them, and what is their operating model on which they operate. Next comes, what is the business and financial models that bank will have once it embarks its journey on the open banking? I think there could be different options, because we are leveraging a third party. They can provide an investment platform for our customers. We have refinancing options. We have a better view for the customers. So customers can, split its loan installments into multiple things and all those things. He has a better aggregated view of the data, so better financing planning is available for the customer. The last but not the least is the monitoring aspect. Of course, it is, in the monitoring world of transactions, know first, know fast is the key mantra there. The sooner we know an issue, the better it is. The issue could be at the bank, the issue could be at the third-party side. But end of the day, for the customer, it is the bank. So how do we mitigate the issues? How do we know the issue? We must have an effective monitoring system in the place. Because the transactions are involved, efficient fraud management aspect must also be there. Okay, this is what the paradigm of open banking looks like in Singapore. Again, we have, I think most of you are aware how the open banking works in the Singapore context. We have SG Findex, which is an intermediary, and that acts as a layer between the banks, which is the data consumer. Consumer here is the person who is logging into bank site or app and trying to access other data. The other data is provided by other banks. We have a lot of banks like DBS, OCBC, UOB, etc. We have government portal agencies who have participated in it, like CPF, IRAS. You can view all the tax-related information. We have insurance like AIX, etc. We have SGX stocks. Now, the aspect which I told, right, the consent and the authentication aspect is very important, which is governed today in Singapore by SingPass and MyInfo. So the moment the customer provides his consent, okay, release my data to DBS Bank or any other bank, or pull my data from any other bank or any other government portal, he is authenticated via SingPass. There are APIs in a standard format across all the players here, bank, export, government agencies and insurers. They provide and pull the data, so data is released from here and eventually shown on a bank's portal to the customer. So this is what the open banking journey at this juncture for Singapore it is. What are the benefits of open banking? I think one is, there could be an increase in digital revenue for the bank. We have the data for all the customers. We know what products the customers have in other banks. Can we offer a tailored proposition to them? Can we cross-sell them? So these are some of the opportunities. With respect to innovation, I would say because open banking is only possible because underlying IT and technology behind this, there is an uplift and there's a capability advancement there. Due to that, we have seen a rise in services being exposed, third parties coming into play. And all this has led to sharing of data for the customers across the banks. Even to the aspect of security, because we say we are sharing the data, the services of the banks are getting shared. There is an enhanced security element which the industry has come up. We have digital signing, we have consent, we have secured customer authentication frameworks in place, we have tokens and all those things. That's where we are ensuring that the customer is unique, he's able to see his own data for which he has provided the consent. The experience-wise, of course, it's good for the customer because he has one dashboard, one view where he can do his financial planning. He has data available from all the other banks, all the other industry at him. It helps him to take decisions wisely. Okay. Next is the use case. Of course, we have a lot of use cases in payments. We have P2P payments. For example, our bank or a lot of other banks here are liaising with Google. Google Pay is one of the examples, where a simple pay now service offered by a bank is now exposed to Google, and there's a tailored offering called Google Pay for that. We have customer onboarding where, the banks need not own the entire value chain and can, for example, bank can leverage a third party to do AML, KYC, and all. So it can facilitate customer onboarding. It can facilitate customer authentication to move forward. Risk decisioning is a key aspect. Earlier, the risks were based for an individual was based on number. So this is my credit score. There's a number. There's a value. Now we have all the data. We have the historical trend of the customer. So the trend helps us to analyze better risk decisioning or risk profiling for a customer. Likewise, financial analysis and planning for a customer is readily available because he has one view, one portal to go and visit all his data. E-commerce also, we have it. The open banking and financial aspects help the customer as well as the merchants, to lower their fees to get better value proposition out of it. This is how the evolution of open banking will look like. Eventually, we are at stage 1 in Singapore where, we have open banking, we have account aggregation, and you have one view, one financial view where data is available. What are the capabilities involved in doing that in Singapore was, we had extensive data security, centralized governance. Now, centralized governance was very important because you have one API across all the banks, across all the financial institutions, across all the government agencies that is able to pull the data and show it to its customers. Next, we have payments. Of course, Singapore industry, we have a lot of banking and financial institutions who have liaised with third parties and involved in payments. Payment initiating providers are the key here. We have liaised with CPF, we have liaised with Google Pay, Alipay. All these aspects are providing alternate form of payments to the customer. Next, what we are going to see is embedded finance, where it's not just the financial products, but the other commercial aspects. For example, you could book a train ticket, and you can, in the same transaction, you can do a travel insurance with us, or you can pay something. those embedded finance will get leveraged into our own journey. Because the embedded finance is coming, we have other players, which are non-fintech players are coming into the play. The banks are forced to offer banking as a service to other third parties. So the fourth aspect, which was earlier only pertained or contained within the bank, is now exposed. The last step would be open finance, where it will be a cross-sharing data across the industry, not just the fintech world. And that's where financial products can be offered to a customer who is at any given point of time. I think with that, I'll conclude my slide. Any questions, I will take it up. I'm here only. Okay. Thank you all. Thanks for the opportunity.